Top of the morning, back at it again with another one. And today, no surprise, we're looking at NASDAQ. So I'm just gonna take it to the weekly real quick. We're just gonna take a look at that, or rather the monthly. Start off from the higher time frame just to give everyone context as to what we're looking at. So just on the higher time frame point of view, we have trading back up into this monthly SIBI. That's what we're looking at right now. Go down to the weekly. Anything of note? Weekly, we're coming back up from piercing beneath this double bottom, pushed up. The next level of liquidity, it's just a clear path for us really. There's an imbalance there, of course, that fair value gap, and also that level of liquidity. On a long term scale, that's what we're looking at, right? Currently, right now, that's what we're looking at. And then going down to the daily, today's Monday, right? So for Sunday, when we marked everything out, based off of it was this candle that was there from Friday. This is today's candle. The next level or the next draw that we saw at the time was this high there. So that pool of liquidity. But we are currently inside a SIBI, so on the monthly time frame. So what happens after that? I don't know, but we'll see. So obviously, since the liquidity pool is over there, the bias for the day was bullish, and on Sunday, I went down to a lower time frame and I noticed this uh, fair value gap over there, right? On the 4 hourly time frame. I'm not really gonna be taking anything for May. I more so would rather just want to prove to myself that I can see the setups and I can conduct myself accordingly without monetary gain or loss being involved in the equation, since I feel like once that's there, it messes up with the psychology and you end up doing stupid things like you kill a trade or a position before it's reached its potential target or originally where you thought it would go. And when you're inside the position, like the management is just way off, like just a lot of things, right? Just a lot of things. So I feel like the system is there. The system is solid. I'm happy with it, but it's just so more so for the month of May, a thing of just spending time with the model, day by day, without having any expectations, just observing how it reacts once it gets to certain PDRAs or levels that we have, you know. So on my side, it's gonna be very cool and interesting to watch all of that play out. As you can see, to start off the May Day, yeah, series or whatever, it was nice to see the reaction from that 4 hourly fair value gap because I looked at the structure from the previous week, like building up to what it was at now, and it was clearly bullish because you could see that bottom low there. We took that out. That was the end of April, going into the of May. 1st of May, we had that accumulation went down to hit this fair value gap. We just browsed it, and then we started going bullishly up again. Then on the second fair value gap opened, we tapped into it, accumulated a bit. Now we're going to the upside, but then I wanna dive into it more to show y'all like today's business from the paper trading or the tape reading rather that I was doing. So same situation. It's that 4 hourly fair value gap, right? That's the 4 hourly time frame on the left. That's the 15 minute on the right. Today, I was specifically using this combination of H4 and M15. I was looking at an H4 PDRA, and my draw was the external range liquidity. So internal range liquidity to external range, like I've had enough time, and I'm happy to say that that's the thing now. Internal range liquidity to external range or continuation patterns. That's all that I'm looking to take, and in the direction of the higher time frame direction. None of this thing of doing counter trend trades against the overall trend. Nah, this is the move moving forward, and it's definitely paying out dividends. So the context was internal range liquidity to external range. As you can clearly see, this is the range we are looking at, that low or this low at the time to that high. Stop loss idea, even though it was much, much more refined. That's just the H4. Let's look at it on the the M15. When I got to my chart at the time, I think it was around about this candle here. So it was 8 o'clock. Price was still printing. But I looked at where we were versus where we were coming from. So via the M15, there was this bit of accumulation happening. I saw the double bottom there. I just marked out that low, and then I noticed price purged it. It opened up this fair value gap, and then we pushed through. So I was thinking power of three, accumulation, manipulation. I was now anticipating the distribution, and I was looking at this 15-minute fair value gap here. You can see delineated by those black lines as an entry area. So I had that marked out. As you could see, the points or the target was 71, the stop was 35 points, point 50, which in my opinion, I feel like 35 points is a good stop. um, I'm really gonna look to make it a habit to refine these positions or entries down to 35 points, even more and more and more, which is definitely gonna help out in future. But then you can see the entry price 19, 19, 19,997. Yeah, and price played around in that area. I saw this candle print, this one also come up, and then, like I said, it was just the mental position. I didn't really take anything, and then it was just cool to watch price start to trade up, especially at the 9:30 opening bell, watching this candle print. Or most of the volatility or the excitement started with this one because this one was shooting up. You could see it extended all the way up to the top there and then came back down. So then I started paying attention to this, like fair value gap there. At the time, it was a SIBI, but I was anticipating bullish movement. So I predicted this would invert eventually, and it did invert. Price was a bit violent. You can see by these wicks, it was crazy today. Very crazy today. Very crazy. So we got the move cool. Then round about 10, price went up. It came back down to retest that 15-minute fair value gap or inversion fair value gap. Initially, my target or my initial draw was, of course, there. When you're looking on the front of this trade, yeah, this trade position was already done and dusted with this candle here, that 10 a.m. one. It pushed straight up, hit there, came back. Like the volatility was ridiculous, absolutely ridiculous. So it took a small piece of the movement. You can see the target or the range we were looking at was from there to up there. Price went way down, but we just took out 71 points. Assuming we still entered there and held all the way up, that would be looking at what, 277 points. We just took out about 71 points, and that's all that is. Nothing crazy. What I liked about today was that, like, this whole setup, it was easy to identify. I didn't really struggle too much. Like I said, I got to the chart around about 8 a.m. ish. Then I just took a glance to see, okay, what liquidity pools still exist, what relative equal highs or lows levels exist. Mark those out. I noticed we were in a discount. Also noticed price was down within our bullish support zone, which is this fair value gap. I just had to go down to a lower time frame, look for entries or evidence of a reversal. What mostly led me, or the main thing I was looking for, was a liquidity sweep. Since I've noticed that entering on PDRAs that form after liquidity sweeps, um, which is in the opposite direction of the overall bullish trend. So for a bullish move, I want to see a sweep of sell side liquidity on a lower time frame, and then price will begin to move up. I don't know if I stumbled the words about, but that's the main gist. Like liquidity sweep, lower time frame, but it has to occur in a higher time frame PDRA area. which is this 4 hourly one. So 4 hourly PDRA, M15 entry pattern. That's what I look for. And then, of course, I look for low hanging fruit. Usually, I look for two times the risk. My TPs, I try to base them off of like the stop loss. So, whatever the stop loss is, I just multiply that by two. And that equivalent, that figure in points, that's what the TP will be. I personally find that a risk reward of two has been the best. And yeah, that's just been the situation so far. So I've also gotten to the point where I think I'm just gonna scalp NQ for the scalps, and then the swings I'm gonna do it on ES. So I'm gonna go to ES on the 4 hourly. No, it wasn't here. I think it was this one here. Yeah, ES. As you can see, ES low key the same setup. Let me go to the daily. Daily, that pool of liquidity. That's the current draw. This is Friday's candle. This is today. Saw that same, NQ and ES are correlated, so setups are the same. 4 hourly fair value gap, price dropped into it, entry, looking for price to work its way towards the draw. Currently, yeah, the hypothetical position is moving in profit. So for ES, it's pretty simple. Just stick to the 4 hourly, enter on 4 hourly PDRAs, and look to move in the direction of the daily or the 4 hourly time frame, of course, and then just keep it easy from there, man. Just keep it easy from there. But so far, those are the initial setups we picked up. We'll just go take a look at the calendar quickly, of course, for the week. Today we had the ISM. It's today, right? Give me a sec. Yeah, we had ISM service PMI numbers. Nothing tomorrow. So for your indices tomorrow, I'm not really expecting much. I will just, of course, just show up, just look at what forms or what it does. But to be honest, the day before a big three news driver, which is FOMC, I'm expecting a lot of chop or consolidation. Nothing much tomorrow from NQ and indices. Maybe it'll be a good day to look at commodities. We'll see. But Wednesday we have the FOMC funds rate. Of course, big, big event. Word on the street is that we'll get a price cut or a rate cut. Should you get the rate cut, I can expect indices to boom. Should the rate remain the same, I expect a drop or a sell off. Should the rates remain or get increased, I expect a sell off also. But it would be interesting to see if they cut it tomorrow. That would be a interesting surprise. And then Thursday we have unemployment claims. So the Wednesday and Thursday, those are the only other like solid weekdays in the week to trade the model. But we'll see. Friday nothing's going on. It's good to take the Friday off, but we'll just see what happens. But Monday it was solid. Got a nice observation. We'll see tomorrow and we'll see the next day and the remainder of the week. But from my side, thank you, God, for the skill, and we'll take at it or look at it again tomorrow. Have a good one.